One of the biggest questions I get from new investors and old investors alike is, how do I find the money for my deals? It's a good question. Donald Trump has a pretty famous quote. He said, anybody who uses their own money in a deal, they're just being lazy. You know, he says that because the truth is, real estate is one of those investments that people love to get involved in. They love to put their money in. And banks do too. It's a loan that's secured against a hard asset, bricks and mortar. You know, it's not a piece of paper, you know, stock portfolio or something like that that can be here today and gone tomorrow. So investing with other people's money is one of the draws of real estate, being able to leverage the cash that you have to do more deals or make a better return on a small investment. So where do you get the money from? Well, there's a couple different places. I mean, I've grouped these into three major sections. The first is going to be your private circles. Now, when I say private circles, we're talking about pretty much your friends, your family. This is, you know, your personal money, and can also be acquaintances and things like that. Now, working with friends and family, you know, it's different for everybody. Sometimes it's a really excellent relationship. Other times it can break a lifelong bond. You've got to determine if that's something that, you know, you're willing to get involved in. Sometimes you have no choice. But if you're going to enter into a relationship or business relationship where you're getting a loan from friends, family, acquaintances, whoever, make sure you put it in writing. In all of these, you know, the next two groups that I'm going to take a look at are a little bit more institutional. They're going to insist on paperwork and things like that. But sometimes when you deal with family and you're taking a loan from your father or uncle or grandfather or brother, sister, whatever, things can be a little bit laxed. I encourage you to treat it like a business, treat it like a business deal. And when you're talking with them and laying out the terms, write everything down. You know, everything from the loan amount, when the money is to be paid back, how much is to be paid back on a monthly basis, what the interest rate's going to be. Anything that you would have in a bank loan or anything else, it's got to be discussed. Because if you don't, it's going to ruin a relationship. And you also have to understand that, and they've got to understand that, when investing in anything, there's no guarantee of any kind of successful returns. And if you're new to the business, you're going to make mistakes. There's going to be losses. There's going to be problems that could occur. You got to make sure that everybody involved in the transaction understands clearly, you know, what's going on. The second source for getting money for your deals is hard money lenders. Now, I don't know if you know what hard money lenders are, so I'm going to explain it here. Hard money lenders are private lenders that loan out their own money or other people's money. They do it based on real estate. Typically, they're going to want first position in a loan, which means that they're the primary lien holder against the property. They're traditionally geared towards either bridge financing, where it's you know, essentially bridge financing is a loan to cover expenses for a short period of time, typically between transactions, or investment financing to purchase and do construction on a piece of real estate. Now, the benefit of hard money lending is that these guys typically are very, very knowledgeable about the real estate market, about a real estate investment, and if they're investing with you, you know, in the property, they're actually investing with you. They've got a vested interest in your success, and they're a really great resource to build on and lean on at times if you run into problems. Call them up, get some feedback. The detriment of hard money lenders, typically it's more expensive. It's a lot more expensive than conventional banks, and if you've never dealt in the real estate world before, you might be a little bit shocked at the rates. They charge 5 points, which is 5% of the loan amount, and 15% interest. You know, that it's going to vary a little bit. Sometimes it's as low as 12%, sometimes it's as high as, you know, 20%. And then the points can vary also, but typically 5 points and 15% interest is pretty standard for the industry. What you get for that, though, is if the deal is good enough, you can purchase and repair a property with no money out of pocket. Yes, it's going to cost you points, it's going to cost you interest. One other point with hard money lenders is that the terms of the loan typically are going to range from 6 to 12 months. It's a short-term loan, it's for a short-term investment. But I recommend hard money lenders. They are a good asset. The third is a conventional bank. Depending on the condition of the property that you're purchasing, it may qualify or may not for a conventional loan. Now, typically on a purchase of an investment, a non-owner occupied property or a second residence, the bank's going to loan anywhere from 60 to 80% on that investment. So you're going to have some money into the property. If the property is in poor condition, you're not going to be able to get bank financing. Right now, the rates are really excellent. So it's the kind of thing that if you can take advantage of a 3% 30-year mortgage or even a 20-year mortgage, it's a pretty doggone good time to buy for a long-term hold. These conventional lenders typically, like I said, it's going to be for a long period of time as opposed to a short-term financing. But when you're looking for money from your deals or for your deals, it's important to really try to think about any way that you can find the cash. Maybe you look at a hard money lender, but you've got to team up with some friends and family and get a little bit of capital put into the deal initially. Maybe you are looking for a rental property and you found one that the conventional banks won't finance initially, but you can do the work with friends and family, or you have a contractor that'll do the work, and you can get some money from friends or family or from a hard money lender to initially buy and fix up the property and then refinance it with a conventional bank. This will keep you liquid enough to continue to do a deal, and over and over and over again, and be able to repeat the process. But there's no real mystery to finding money for your deals. It's just about making sure that you do what you say you're going to do with a lender, make your payments on time, stuff like that. And if you do that, regardless of who you're working with, whether it's your friends, family, or other institutions, you're going to build a reputation where people are going to lend you more and more money. It'll open up more and more doors, and honestly, it ends up getting cheaper and cheaper over time. So if you're looking for money for your deals, that's where to find it.